this week, I want to clarify something that was really confusing a client of mine that was from another state and buying their first home in California. Every state differs a bit in how the contract is laid out, what disclosures have to be part of the transaction, and even the process for closing. I'm going to break it down for you pretty generally for California. Okay, so your offer is accepted. Yay! Now what? The first week and the final week are the busiest weeks during the process. I'm going to jump back and forth a bit between what the lender's doing and what you're doing with your realtor because a lot of it happens simultaneously. As soon as your offer is accepted, your lender should have a conversation with you to go over all the numbers with you again and make sure you don't have any initial questions. The lender locks in the interest rate right off the bat. Once the loan is locked, the lender will issue you lender disclosures to fill out and sign. These will show your down payment, a pretty close estimate of your closing costs, your interest rate, and the detailed breakdown of all the numbers for you. You'll also pay for the appraisal at this point so the lender can order that for you. Your file will go into underwriting at this point. Now, if you followed my advice to be fully underwritten even before you started shopping, this is a no-brainer. It's just going to go back in to add the details that are in the contract and related to the specific property that you're buying. Within the first day or two, you'll either drop off a check or go to your bank to do a wire for your earnest deposit. When the escrow receives the deposit, they issue their escrow instructions and a packet of other items they need completed and signed for the transaction. You may hear this referred to as the opening packet. Make sure to get this done and back to escrow within the first week so that you get it out of the way and they have what they need to move everything forward. The key is never have the other side waiting on you. This will give you leverage later on if anything were to come up. Within the first few days of acceptance, your realtor will help set up a home inspection for you. You, your realtor, and the home inspector will go over the findings together, and the inspector will issue you a detailed report with photographs showing you all the findings. You may put together a request for repair with your realtor at this point. Your realtor will help negotiate that for you with the seller's agent, and once you and the seller come to an agreement, both parties sign finalizing the terms agreed to. Those repairs are to be completed prior to your final walkthrough just before closing. Or sometimes the seller just gives a credit in escrow instead of actually doing the repairs so that you can use who you like after you close escrow. Also, within the first week, the listing agent will send your realtor the seller disclosures. Now, most of these are actually just boilerplate advising you generally on different things. However, there are a few that are property specific where the seller is required to answer a series of questions truthfully and to the best of their ability to make you aware of details of the condition of the property. Make sure to go over these with your realtor so you feel comfortable and secure. You'll sign these disclosures and your realtor will return them back to the agent. If the property has an HOA, somewhere in the mix of this, depending on how quick the HOA property management company is, you'll be given an HOA package from escrow that gives you all the details on the HOA for you to review and approve of. Hold on to this. When you close escrow, you'll want to call the property management company to set up your account with them, to find out how to make your payments to them, and to get a transponder if there's a gate or a pool card if there's a pool. Okay, back to the loan. So, your file went into underwriting and you have loan approval now. At this point, you'll get a list from the bank of anything else they may need, like your homeowner's insurance information, proof of the earnest deposit clearing your account, or updated pay stubs or bank statements. Also, by this time, your appraisal should have come in and will go into underwriting to be added to the file. Once you get those items in, they're reviewed, and then the closing disclosure is issued, which has all the final escrow and title fees. Once you sign the closing disclosure, the file moves into closing with the bank. Once your file has been given the clear to close with the bank and escrow communicate with each other to prepare the figures and details for the loan documents. The lender then issues the loan documents to escrow. Once escrow actually has the loan documents, they reach out to you to set up an appointment to have you sign them. Depending on how close you are to escrow or how crazy your schedule is, you'll either sign them in the escrow office or with a mobile notary at a location of your choosing, like your own living room. Either before your signing appointment or actually at the signing appointment, you'll be given wire instructions and the final amount you need to wire to escrow for closing that covers the remainder of your down payment and any closing costs you may have. Get this done right away so time is not lost. Now, here we can actually have a little difference of process depending on your lender. The lender I always recommend does what's called table funding. They actually send the funding wire or the loan amount you're borrowing to escrow around the same time they send the loan docs to escrow. However, not all lending institutions work the same, and this can really make a difference if you're on a time crunch at the end. If a bank does not table fund, here's what happens next. You sign the loan docs. The loan docs are given back to escrow. Escrow scans them and emails them back to the lender. They also overnight the originals back to the lender. Some lenders can't proceed until they get the original loan documents in hand, so you can lose a day or even 3 here. When the loan docs are returned to the lender, they work through their funding list, which is a list of items they need to verify, check off, review before giving the okay to fund, or send the loan amount you're borrowing to escrow. Once the lender has gone through their laundry list, they fund the loan, sending that money to escrow. There are funding cutoff times with lenders too. They'll have a time of day, sometimes 11 or 1 for example, that they must have everything signed off by in order to fund the loan that day. If the cutoff is missed, it rolls over to the next business day. Once escrow has your final funds and the funding wire from the lender, they're able to set up the file for recording. Yay! Again, there are cutoff times for this too. Depending on the title company, escrow must have all funds in escrow by say like 1 or 2 in the afternoon in order to allow the file to be released for recording. What's that? Well, a person from the title company called a runner takes all the paperwork needed to the county recorder's office and stands in line to record the sale with the county. Once the sale has been recorded, they tell escrow and the good news is spread that you now own the home. Yay! If by some chance the loan funds after cutoff, the file will roll to the next business day for recording. Remember, until you have confirmation of recording, the house isn't yours yet. Confirmation is the best news that you'll get that whole week. Congratulations, you're a homeowner. Do you have a question about buying or selling a home? Please like this video and leave a comment with that burning question you have so I can answer it for you. I'm Katherine ℉𝓼. Thank you for joining me in becoming HomeWise. See you next week.